Ernie, looking at the Mid-America report, it really kind of took a backward step.
It did, Cindy. Our survey of supply managers in 9 states, the Mid-America region stretching from North Dakota and Minnesota to Arkansas and Oklahoma, that number plunged. Now, it's right at growth neutral, 50.0. So this was a tough month. Of course, what we're seeing is a lot of pullbacks due to uncertainty, but some real factors going on there, meaning some industries that are pulling back. We're seeing some, I'm a little concerned going forward what happens in the 9-state region, the Mid-America region, for the businesses that we survey each month.
You mentioned that jobs, that didn't do well at all.
Our jobs index moved below growth neutral for the month. Of course, that's not a good signal. We lost jobs in in manufacturing and value-added services for the month of October. So what we're likely to see is a real significant pullback in job growth in the months ahead for the overall economy. So I expect for the overall region job growth to come in at less than 1%. Annualized. We need to see that. We need to see double that. We need to see double the increase in jobs, the growth in jobs over the next 3 to 6 to 9 months. We're not likely to see, at least according to our survey, our October survey of supply managers in the 9 states.
So what is it that's impacting the overall index? Are we looking at connection to agriculture? What is affecting it?
Well, for the month of October, of course, we had the federal shutdown, and about 3/4 of the businesses said no impact. But 1/4 of the businesses that we surveyed said yes, there were negative impacts from the shutdown. Now, of course, I think those will be made up. We'll see. I think those will be temporary. We'll see those reversed, the impacts reversed in the weeks and months ahead. But still, there were some impacts from the shutdown. Secondly, the sequestration, although the impacts there are fairly small, those affected some businesses. Finally, those businesses connected to agriculture and exports, both of those are one and the same in some cases for businesses, but businesses tied to exports, businesses tied to agriculture, that we saw real pullback, or at least some negatives there. For example, agricultural equipment manufacturers seeing a much tougher year this October than last October. So that's showing up in our numbers. Although again, what we're expecting, our survey is saying that growth ahead is going to be pretty slow, and it's not going to be anything like what we need to grow this economy at a pace back to pre-recession levels. That would be back to 2007 levels. This economy just continues to not grow and grow at a pace that's just not sufficient to really bring down unemployment rates. And some of the states still have elevated unemployment rates. And now, of course, some of the other states like North Dakota, South Dakota, Nebraska, and Iowa, the unemployment rates there are already fairly low.
What about the impact of the lack of a farm bill? Is that having an issue?
That showed up in our surveys, and some of the businesses reported that that Congress and the administration have got to move forward with a farm bill. We see this impasse over food stamps versus the farm bill, and of course we've had a temporary farm bill for a year now. What's needed, in my judgment, is a 5-year farm bill that puts a lot more certainty in those in agriculture, but also certainty for those that provide agricultural services, those that provide agricultural equipment. That's a lot more certainty, and that's going to be good. We definitely need to see a farm bill coming out of the Congress. At this point in time, there's a lot of wrestling going on in Congress, and we'll have to wait and see what comes out of it. But right now, it's mostly uncertainty.
Surprisingly, confidence was up for the month.
Confidence was up, but we took this survey was administered, and the supply managers took it after the shutdown ended. So there might have been a lot of good feeling after finally we got beyond the debt ceiling. Of course, this is temporary. The Congress only pushed it out till January and February, so we'll have to wait and see. But I think what we're going to see, in my judgment, is the Congress and the administration are going to come together and move beyond it this time. The costs are just too large. We need to see a raising of the debt ceiling. We need to see not see another shutdown in the government. That is not good for anybody, not good for the businesses that we survey, certainly not good for businesses that sell directly to the government.
Anything else about the survey that you want?
Well, what we saw also is our price gauge continues to move along sideways, but even with that, what we're seeing is price bubbles. So we're not seeing inflation, but we're seeing asset bubbles. What that means is agricultural land prices continue to grow at a bit faster pace than what are sustainable. We're seeing also other many asset prices moving up as a result of the Fed's QE3, where they're increasing the money supply at what I judge is an unsustainable pace. So what we're going to have to see there is a pullback in QE3, but that doesn't look like it's coming anytime soon. So what producers out there can count on, in my judgment, is the low interest rates well into the future, meaning into 2014. We're not going to see a rate hike until it perhaps is the earliest it would be, in my judgment, is second quarter of 2014. So the interest rates are going to remain low. That would be on the long term. And the short term, of course, now I'm assuming that the Congress raises the debt ceiling, and that's not an issue. If failure to raise the debt ceiling would mean interest rates, at least on the short end, would begin to rise perhaps as early as January.